Now, here's your host for AHA Business Radio, Alan Hirsch.
Good evening out there. Welcome to the show. My guest tonight is Andy Fleischer of Strategic CFO Services. We will be discussing about cash management for businesses and why it's important in all various aspects of it. But before we begin the conversation, I'll remind everybody that after the first break, I will have the AHA Business News Update. And later in the show, I will have the AHA Business Trivia Contest. The caller with the answer to tonight's trivia contest will receive a gift certificate to the Capitol Grill. Andy, welcome to the show. As I said, we're going to be talking about cash management. But before I get into that conversation, I usually ask my guests a question, and that is, what motivates you to get up in the morning and go to work?
Well, I love improving businesses, Alan. I mean, I really have a passion for it. And I find it's so many of these businesses I work with, we're able to really use my experience and having worked with over 300 companies in my career to really help these businesses go forward, do business better, cheaper, and faster, and really improve the valuation of their businesses over time.
Oh, that's great. So how'd you get started as in the CFO business?
Well, I did a stint in public accounting for about 7 years, a couple firms, worked with a lot of great companies and some not so great companies. Really learned a lot about what it takes to do good business and make a lot of money in business. Additionally, worked in a couple of great big companies and a couple of small companies on the corporate side. The small companies in the internet field went through a little thing called the dot-com boom and dot-com crash, and was able to really learn a lot and help these companies grow and ultimately sell off a couple of companies for a very nice sum of money for the owners.
I hope you shared in some of those.
A little bit. They were very generous.
Good. I'm glad to hear that.
But my passion today is working with companies, and my team of CFOs share the same passion. And our goal is to always help the business owners get a better handle of their business, to get better understanding of their business through the numbers and through the strategy, make sure that they're doing business better and making more money and building the enterprise value of their companies.
So my really first question is, and I probably know the answer, but I want to hear it from you, why is cash king?
Why cash is king? You hear that all the time, but from my experience, nothing has caused more business failures that I've seen up close and personally in my career than lack of proper cash management and lack of cash flow. It will absolutely kill a business if the business owners do not have a handle on their cash flow. It's the lifeblood of every company, and you need that blood to flow. That cash has to flow, and you have to have a plan for your business to be successful and to be a going concern.
So what are some of the kinds of plans you like putting in place for your clients to help them manage their cash?
I don't think the plans have to be very complicated, but they need to be simple. They need to accomplish the goal of giving you that windshield. And typically, some of the plans that I put in are Excel-based. We typically have a rolling 13-week cash flow. For most businesses, this works very well. And, we're really talking about really measuring the true inflows or receipts of a business and true outflows, which, it's not your typical profit and loss statement. Me being an accountant by trade, I think it's important to point out that that's one of the common misconceptions. A business owner will say, well, I'm making money. My income statement says I'm making money. But if you're not collecting those receivables and you have other payments that are for future periods that are due now that don't get recognized for accounting into the future, you're not making money, and you're certainly, your cash flow is being harmed very adversely.
Well, as I like to tell people, I've seen and I think we talked about it when we first met, that I've seen a number of businesses that have very profitable balance sheets and profit and loss statements, but go out of business because of all their profits and income happen to be in receivables and inventory, and therefore can't pay next week's payroll. So to me, cash management has always been a very important part of how I manage the business. As I said to you earlier, I always required, and my business was a little different than a service business that takes money in, a lot of money on a regular basis. I always had that kind of cash forecast that I required every time I got reports from my CFO or my controller to make sure I knew where we would be. It kept me informed. So, and we'll talk about it, but some of the things you can do when you have shortages. So you also talk about some of the more recent developments that have made some changes, particularly, I guess, in the last 6 or 7 years in CFO management and products and the structure within industry and banking. So can you tell me a little bit about that before we get into some other details?
Yes, absolutely. One of the things we've seen, that I like to say is that all the rules have changed since the financial crisis of 2009, 2010. And one of the big things that I've seen throughout a number of industries, throughout my entire client base, is a delaying of cash coming from larger businesses to smaller businesses. 10 years ago, almost everyone paid in 30 days. That was the norm. But since the financial crisis, we've seen a lot of these larger companies, quite frankly, hoarding cash and paying their bills in 60 or 90 days intentionally and forcing those terms down onto the smaller businesses. A lot of the smaller businesses I work with, their suppliers are requiring them to pay their bills in 30 days or less, and yet they may not get paid for 60, 75, maybe even 90 days by the big companies. They have no choice but to take those terms because they need the business to survive. So managing that extra 30 or 60 days of cash flow is very challenging.
Particularly when you're a small business in between a big business you're selling to and a big business you're buying from.
Yes.
They both want their cash, and you as a little guy are the one that really is going to suffer the most in doing that. You also talked about some of the newer products that help cash management.
Yes, absolutely. I mean, I like a lot of the cloud-based accounting systems. QuickBooks Online in particular, NetSuite's another one that's very good. I think the thing that's really neat about the cloud accounting systems that we've seen is by setting up your invoicing to email out a link to a website where your customer can come in, click on the invoice, and put their credit card information in, or a bank, preferably a bank information, because you can save on the credit card fee through electronic funds transfer. It's a way to get the money in much quicker, much more seamlessly using the technology, and it accelerates your cash flow. If you can get those invoices out and get that cash in faster than it would take in mailing a check, I mean, even a week makes a huge amount of difference when you're running a small business. If you can permanently pull forward all of your receipts a week, 2 weeks, I've seen up to a month pull forward by just getting the invoices out faster and getting payment in faster. I've seen an entire month pull forward. That's a permanent pull forward in cash flow, which can make or break a small business.
Oh, absolutely. So you're really talking about, and this is part of some of the changes in the banking products. We used to get a check. It'd take 3 or 4 days in the mail. You'd take it to the bank. They take 3 to 5 days, particularly if it was an out-of-town check, to clear it. But now what you're talking about through these online products, banking product, working with the banks in conjunction with the software packages, you basically have it's overnight.
Absolutely. And the other thing is, when you are receiving the checks in, having that check scanner tied in your bank account and scanning those checks daily, not having to drive to the bank, but scanning those checks daily. A lot of these banks, you can get that real-time availability of funds, same day, within 24 hours, certainly. Getting that money in that bank, clearing faster, all of that helps you. You get all full use of that float much quicker than if you wait to the end of the week and to make that bank deposit. It's very important to get that money in faster.
So that's one of the tools I assume you're using with your clients to try to get the money in faster and use it faster from their bigger customers. Are there any other things that you're working with or you recommend for your clients to try to get that money coming in faster from their customers?
Yes, certainly. The use of discounts and traditional payment strategies to get money in faster. Oftentimes, giving a customer a 1 or 2% discount to get the money in 10 or 15 days is a very good strategy and actually pays for itself from a cost of money standpoint. And getting that money in faster, you have use of those funds much quicker, and that can really help accelerate the cash flow in a small business. But the main thing we like to do is utilize the technology. That's one of the big things that we like to do by having a better forecast and visibility of the inflows coming in and then timing the outflows going out, and having a strategy built around that is really critical.
So what are some of the strategies that you're using on those cash management programs or systems in order to work with? I mean, one of the things you talked about is a 13-week revolving cash flow statement, but some which should certainly help. But what are some of the other things?
Yeah, I think the basic premise is having that windshield or visibility and being able to see all of your inflows when you believe they're going to come in. You can basically time those in most businesses based on your payment cycle and your history, always breaking out the anomalies. You're a super large customer that, pays, a large chunk of your receipts for a month. It's very important to break that out separately and have timing to make sure that that's in. But also, traditional collection processes, having someone that is minding the store there, staying on top of your clients that are slow pays. Some of the best credit managers I've ever known, one in particular that sticks out because he was in the restaurant business, collecting from restaurants, and they're notoriously struggle to pay their bills. And he was one of the best I've ever met. He said that 1/3 of the people you can send them an invoice, ask them nicely, and they'll pay you. Another third you need to remind them a second time. The other third, you have to chase them, badger them, and do whatever you have to do to get them to pay. And this is a distributor that had very, very low write-offs and bad debts, dealing with a historically, trouble-paying industry. So,
well, it does. It's before I continue with the next question. Just want to remind everybody, I have Andy Fleischer of Strategic CFO Services in the studio with me. To join the conversation or ask any questions, please call 410-481-1300. And what I was getting to is you use this 1/3, and in a lot of things in business, and I've used it a lot. As salesmen, you have 1/3 that are great, 1/3 that aren't, and 1/3 that you're not sure whether you should change or not because you'll get 1/3 of the other. But it's true, the same thing with customers. But what I was going to say about collection is a business owner should have somebody collecting that money if it's not them.
absolutely.
Because if you don't have someone on it, it slides, it falls behind, and when you don't have the cash, you can't pay your bills. And I agree with you. You need to have a good person somewhere in the business that does the collection for you.
Absolutely. And typically you don't want that to be in the sales function. Typically it needs to be more on the administrative side because you want your sales function to be, friendly with your customers in most times. But as a last resort, the salespeople can get involved and certainly have done that in critical situations with certain clients.
Okay. One of the other things that I think's happened over the last 7 years with the financial crisis is the changes in the banking regulations and what's happening in the availability of money through banks. Can you, as a CFO who I know works with a lot of banks, with a lot of clients, with a lot of banks, a lot of things have changed. Can you talk about that a little bit?
Absolutely. I work with a number of great banks in the area, and I hear every day from these bankers when I meet with them that they're looking for good clients, but they just don't have the amount of information that they need, the right type of information that they need to make these clients bankable. And that's one of the strategies that we use a lot, is making sure that the financial reporting is up to date, is accurate, and truly reflects the business, and then working with the bank to get an arrangement in place, especially in these environments where maybe the customers have stretched them out, from 30 to 60 to 90 days. It's critically important that we have a line of credit product in place from a good, strong banking partner that's willing to, lend on receivables and inventory if that's the nature of the business, or, some other factor that fits that business nicely. And then it's very critically important that the business owner understands that they can borrow that money to make the sale, buy the products, and pay the payroll. But as soon as that money comes in, you got to pay that line of credit down. And when we use that effectively, it's a very, very strong tool to grow the business in short-term capital. The banks are very happy and are very willing to do more credit with the company.
Yeah, one of the things I've always talked to my clients about, and I think we talked about it before the show, is building that relationship with a bank. In spite of the banks being huge, there's the banks before the crisis, everyone complained they were too big. They're bigger now than they were then. But being that as it may, you still need to build a relationship with your loan officers and your relationship managers, because you need to let them know both good and bad so that you can deal with them. They can be there when you need the money. And when you're doing well, they need to be a partner and be aware of it, because sometimes when you're doing better than you had been, you need more money than when you are not doing as well. So you need to be able to build that banking relationship. And I'm sure you as a CFO for hire work with a lot of your clients, helping them to build that relationship.
Absolutely. That's definitely one of the things we do a lot, is to make those introductions and, find the right banking partner for each type of business. Banks do vary in their appetite for different types of clients, different types of deals. So it's critically important that we find the right banking partner for each and every client that we service. At the same time, it's critically important that we get the right recipe for success from a facility standpoint, and that the business owner understands that there are certain things you have to do with a bank, and you need to regularly communicate with them. You need to be honest and upfront with them. When things get bad, I can't tell you how many times I've seen clients will actually run and hide and try to avoid the bank. That's the exact wrong thing to do. Sitting down with the banker is the right thing to do, and explaining where you're at.
Absolutely. I have one client who is a government contractor who was anticipating problems through the sequester and the closing of the government last year. And I made a suggestion: go to the bank, tell them what the issues are, that you're going to be fine, but you might have cash flow problems if the government shuts down, isn't going to pay you for a couple months.
Yes.
And he went to them knowing what the problems had been for 3 or 4 months, and ended up getting an enlarged line of credit, because he told them where he was going to be, and they worked with him to get through that crisis. And it panned out because he was active and communicable. You're absolutely right. People that bury their head in the sand like an ostrich will not be successful in dealing with banks. When they have a problem, the bank will, when you call the bank when it's too late, the bank will say, "Oh, thank you," and they'll turn it off to the workout department instead of working it out with you.
Yes.
They'll go into the collections. They'll give you 30 days to pay your loan, instead of being your partner in a general sense, working with you to help you grow your business. A good bank will do that if you communicate properly with them. Why don't you tell us a little bit about how you see cash flow and what really makes it up?
Sure. Yeah, I always start with the revenue receivable cycle. What are the inflows? They're certainly the one thing that's way beyond your control, so you need to focus on those first. How are you going to get those receipts into the business? What is your typical payment terms? When are they going to come in? I want to get those under control, look at days receivable, try to map that into a forecast. As I mentioned before the break, we typically like to do a 13-week rolling cash flow. Our goal is to get 75 or 80% accuracy here, to give you just a good big picture feel for when the peaks and valleys in your cash flow are going to occur. So we forecast out our receipts first. We typically break them down by payment and payment type, whether it be credit cards or check or wire. Try to forecast that and get some accuracy for when those things are going to occur, because they do occur differently in the normal flow of business. Any anomalies, any large piece of business, for instance, you have one business that equals 10%, one customer that equals 10% of your business, when they pay you once a month, you want to break that out separately and make sure you've got a good handle on that, because that's a relationship issue that you need to work that relationship to make sure they're going to pay you on the 15th if that's when you're expecting to get paid.
Well, there are also a lot of companies, small, mid-sized businesses, that might have a company that does 30 or 40% or 50%. The higher the percentage, the more you have to have someone controlling that.
Absolutely. Somebody's going to manage that account and make sure you know that they've accepted your invoice and that they're going to pay you when they say they're going to pay you. That's critical to any small business. From there, I typically look at non-operating expenses and payments first. And one of the things I see many business owners miss are routine things such as the distributions or dividends to themselves. Oftentimes that can be that's right out. It's not even in a cash plan, but that's something that they're planning on that's critically important to them. That needs to be part of it. Any debt or lease payments, by the same token, that are fixed payments, they have to be in that plan. And anything else that impacts cash from a non-operating basis absolutely needs to be in this section. The last section is what I call the major expense components. And as Alan and I were talking during the break, one of the things here is it's very important to look at your expenses, certainly on an annual basis, but a lot of business owners I know look at it on a monthly, ongoing basis, are always trying to find where they can squeeze a little bit more expense out of the business. Oftentimes, technology, phone systems, insurance are great places to look. As contracts come up for renewal, there's new technologies out there. Certainly in the phone, we've seen a lot of shift to the VoIP systems that offer a very good quality service that 10 years ago they didn't have at a much more affordable basis.
For those who don't know, we're talking about voice over internet phones.
Yes.
So some people aren't aware of that, but you can now get whole phone systems that are internet based without the whole hardware and software that you used to have in your own offices. But go ahead.
Yes. So thank you. And little things like that can shave 10, 15, 20, maybe even 50% off of your expense base, and that can really help, on the payment side. But listing out all of those major payments, certainly by major components such as payroll, key suppliers, those type of things, making sure you've got those lined up so that you can meet their terms. And then typically everything else kind of falls in the bucket of what I call accounts payable. And what I like to do is schedule a budget out for cash for accounts payable. So as receipts come in, when receipts come in heavier than forecast, we've got a little extra money to take care of accounts payable. When they come in a little less, then we have to pick and choose and make sure that, we're taking care of the hand-to-mouth people in particular. But also there are other, any critical vendors such as your health insurance that will probably terminate your coverage if you don't pay them. They've got to be top of the list. And then working yourself down to other people that get lower in priority. But it's very important to have that budget amount in there so that you're never spending more than you have coming in. And you have to have a plan. And this is where the entire forecast works together, is having a plan to resolve all of those payables and make sure that you collect all of those cash items, and that you're staying on top of those aged receivables and making sure that they get collected. But flowing all that in, and it's really powerful when you have a line of credit and you can forecast how much you need and how much you pay back. Having that whole plan work together is a great way to manage your cash better as a small business owner, and really utilize very effective bank financing at very low rates these days, typically on these lines of credit, but really bridge the gaps between the peaks and the valleys of your cash flow.
But if you can, as we talked about earlier, if you can show the bank that you have a handle on what you're doing, you have a better chance of having the better line of credit, the lower interest rates, in order to satisfy the bank's needs and to satisfy your short-term needs as you move and grow your business. One of the things that you mentioned payroll, but I just want to remind everybody that when you talk about payroll, make sure you're paying your Social Security taxes, your withholdings, and everything else, because they have a total different situation. As we talked last week in bankruptcy, they create a totally different liability in a limited liability company or a corporation. The principals and board members and shareholders might have liability if you're not paying down the road, if you're not paying those taxes. So make sure they're in all that payroll, and included with payroll, your retirement accounts, all of that kind of thing needs to be part of that structure. Just want to remind everybody again that I'm in the studio with Andy Fleischer of Strategic CFO Services. Excuse me, I've got some allergies today, and it's really bothering me. So please call 410-481-1300 if you have any questions of Andy or myself. So you're pulling all this together to create a cash flow statement, which, as you say, rolling 13 week, but it could actually be longer depending on the business. I mean, knowing the businesses was in, I actually did it a 12-month rolling average because it was the nature of the business. And it was a blessing to know what you anticipated your line of credit to be. And again, you can manage when you have this kind of information, you can manage your business. You can anticipate shortfalls and other issues occurring. So one of the things is beyond just the understanding the cash flow is cash management systems. So can you tell us a little bit about some of the cash management systems that are available and that can be used to beyond just the numbers to help people manage their cash?
Yes, well, certainly, having, a good banking system and making sure that you can get those receipts in quickly is number one. for a cash flow management system. Several of the banks have great products to get the money in very quickly, and I highly recommend you work with your bank to get the right tool in place. Second of all, some of the financial systems that are online, I really like a lot of the cloud-based systems such as QuickBooks Online, NetSuite for a little bit bigger companies are very strong at getting that money in with their cash management tools and providing a lot of this integrated forecasting more on the NetSuite side. But I think those are great tools to use. Anything to get the money in faster is really important in this game.
Now that you understand a little bit of cash management, we're going to go to break in a minute or two. How do you improve some of the cash? Once you have it all in place, how do you, besides the receivables, what are some things you might put in place to improve that cash flow?
Yes. So once you have visibility, our goal here is to get a windshield, a visibility pattern, so that we can plan. So once we have, a 13-week, typically is where we start. Some businesses we do 29, some can be up to a year, as Alan mentioned. We want to have that visibility so we can see when the peaks and valleys are going to occur. Once we have this visibility into the business, and typically what I see is typically within 4 to 6 weeks, you have very clear visibility. It gets fuzzy as it gets further out, and that's okay because it will get clearer as it gets to you. But having a 4 to 6 week window with very clear visibility allows you to plan. So you can plan, for instance, if you have a line of credit tied in, you can plan how much you need to borrow from line of credit, when you're going to be able to repay it, when those receipts come back in. You can plan, okay, I've got a standard payment that comes up here. I know I need to purchase line equipment. Maybe a lease makes more sense.
Okay. Thank you. We'll continue that conversation when we come back. We were talking a little bit, and I interrupted Andy talking about some tools to improve cash management. So why don't we continue where we left off?
Sure. Thanks, Alan. I think the key is once you have visibility and have a cash plan, cash management system in place, which doesn't have to be an elaborate, very expensive system. It could be something as simple as an Excel spreadsheet. I'm a big fan of keeping things simple and spending a very minimal amount of time on this because I see too many business owners spend just extraneous amounts of time managing their cash because it can actually manage you if you don't manage it. As we know, cash flow
I would like to suggest if a business owner, if they're doing the cash management themselves, although it's very important, they should really have someone else do it. The price of having someone do it is a lot less expensive than them not being out there selling or producing or running the business. So they really need to have someone running the cash management, giving them the reports so that they can understand where they are, ask the questions, but they need to have management people working for them doing cash management.
Absolutely. I couldn't agree more. We do it for a lot of our clients, but I think it's key that the business owner has an understanding of it because when there's that big bracketed number that's coming up, a payment coming up,
or as they say in the red.
In the red is that's coming up and your cash flow is about to take a big southward dip, especially if that receivable doesn't come in that you're planning on coming in, you have to have a plan for it. And that's what, once you get visibility into your cash flow, now you can start planning. I always say all costs are variable in the long run, and that's where I like to start. You can start with your biggest cost. In a lot of businesses, certainly in the service side, it's going to be payroll. Certainly in a manufacturing environment, it's probably your suppliers, and that's where you can work on negotiating with either new sources or looking at your staffing in your company and start making those adjustments to lower those outflows of cash. At the same time, you may need to increase them because you may have a lot more sales coming in and you may need more people to manage those customers and to deliver your services or products. So by having all of that incorporated in your cash plan, you can see exactly when these things are going to hit from a peaks and a valleys standpoint.
And sometimes you have to make a decision knowing that you're going to grow in the future and spend money now. I've had a discussion with a client over a situation where he keeps talking about adding a salesperson. And when I say you want to add a salesperson, you're going to add more sales. If you get all those extra orders, how are you going to deliver the orders? You need someone actually as a support services. And sometimes you have to invest in the support services to make sure you're capable of delivering when you get those extra orders. So sometimes you have to look at an investment in the future and not just the top line, but you have to look at the costs that help you run a business. And we were talking, I lost my train of thought, but we were talking about making sure you sometimes invest, which is cash flow out, to make sure you can deliver. Because one of the biggest things people who listen to the show understand that, and why I ask the question that I start every question is why you're in business. It's how you do it. If you don't deliver, you don't produce and do what you say you're going to do, your customers aren't going to buy from you, and you're going to shrink and you're going to die. So if you take all those extra orders and you can't deliver them, it's just as bad as if you have everything in receivables and inventory and can't pay your bills. Both things can happen that can kill a business. Anyway, any other issues on improving cash management that before we go on to the next topic of conversation?
Yeah, I think we covered most of the issues, but I think it's important to go down your cost structure, starting with the biggest expenses first and working through and having a long-term plan to make sure that your costs are optimized for your business and flowing that into your cash plan so that you can see when things are going to come. Oftentimes, one of the things that gets missed is when you need to hire a new person, especially on the service side, there's often training involved. And that needs to be part of your cash plan because, again, talking investment, you need to train the people. You need to make sure that person is capable of actually functioning like the other people that you may have that deliver that service today. You make sure that person is ready to go because those orders come in. Those customers are going to have expectations, and you want to meet them and delight those customers.
You're absolutely right. Just remind everybody the trivia question is still out there for a gift certificate to the Capitol Grill. What company turned down an offer from Alexander Graham Bell to buy the patent rights for the telephone in 1876 for $100,000? Just a hint, the company still exists today. It did not go out of business because it didn't buy it. It still exists. So please call 410-481-1300 if you know the answer. And I'm having conversation here with Andy Fleischer of Strategic CFO Services. We're talking about cash flow. Now, there's one part of cash flow that most business owners hate, and that's turnaround and cash crisis management. So can you talk about some of the things that you do and you recommend that business owners, first of all, they should try to avoid it by doing all the planning, but sometimes they get in those situations. And I got Adam back on the phone. I think it's the same Adam. Hold the line. Adam?
Yes. Hey, how you doing again?
Fine. Yourself?
I'm doing all right.
So what'd you do? Google it? You found the answer?
Yes, I did. It was the Western Union Company, and I believe it was Hubbard who offered the patent to Western Union back in, like you said, in 1876.
Absolutely. You're absolutely correct.
And he turned it down. Right.
He turned it down. And the compound matters, they then tried to develop a competing product, in which case Bell and the telephone sued him, and they had to pay triple damages in a patent infringement case. So it really made it compounded it even worse. But anyway, if you'll hold the line for Tish, she'll take your information so I can get you that gift certificate. So hold the line.
Thank you very much, and I'll continue to listen.
Thank you very much, Adam. Appreciate it. So we were just getting started and talking about turnaround cash management. So.
Yes, I mean, I have seen several of these instances where you have a company that, once upon a time was doing very well, and all of a sudden it either happens very quickly, or sometimes it's a very slow deterioration, but they get to the point where they bring us in because they've had serious problems. They're trying to figure out how they're going to survive, how they're going to make it. Typically, the business owner is under intense personal stress, and it's not the funnest of situations to deal with. So I highly recommend, as Alan said, we try to manage the cash flow from the get-go and, successfully manage it as we go. But in a turnaround situation, the most important thing is that we have cash, get a cash infusion as quickly as possible. Oftentimes business owners don't look at the big picture, and that's one of the things that I think we bring an outside individual in, such as myself or one of my other CFOs, we can get a really different perspective on the business. And one of the first places I'll go is, do you have any idle or unused assets in the business that you're not using today? Maybe that printing press still has $100,000 of market value at auction. Maybe we can auction and get $100,000 into the business today, and that can relieve maybe half of your payables, help make the next payroll. the next several payrolls, hopefully, and give you that infusion to really give us the time to get the strategy in place, because that's the second piece of it. Once we get an infusion of cash, sometimes it's working with a bank. A bank, if you have a good banking relationship, we can lever that and get a permanent infusion of cash into the business. But oftentimes to do that, we have to have a plan in place that makes sense.
Absolutely. So, and having been through, which listeners know, through a Chapter 11, I can tell you some of the crisis management that I've gone through. But those are very, very wise comments. Is you've got to look at every asset you have, see what you can sell, what you can use, what can generate cash to help the business. And finally, we talked about super growth. And growth, just the opposite of crisis cash management. Well, not necessarily the opposite. It can create the same kind of crisis cash management when you're growing. So what are the things that you look for and help business owners do when they are growing and sometimes outgrowing the cash?
Yes, very good question. I've had a lot of experience, particularly on the internet side, where businesses grow astronomically overnight. And I think, first of all, the most important thing to understand is it takes capital to grow. And David Packard of Hewlett-Packard fame came up with a formula called Packard's Affordable Growth Formula, because he wanted to grow Hewlett-Packard as quick as he could without borrowing external funds. It's a pretty neat formula. You can look it up on the internet, but it's one of the things that we will utilize with the business owner to understand that if you want to grow 50% next year, if that's your goal and you're capable of doing it, you're going to need to put X number of dollars into the business, and that has to come from somewhere. It can come from your pocket if you have it. It can come from bank financing. You can sell equity, but you need to have a plan in place, because if you try to grow too fast without it, you'll grow yourself right out of business. You won't be able to pay your bills. You won't be able to pay your staff. Your people will not be there smiling, taking care of your customers. You'll grow yourself right out of business. I've seen this on several occasions, and it's very important to have this plan in place to make sure that you can address those needs.
And part of that plan might be working with a bank, might be working with some of your suppliers in asking for extended credit over a period of time, or whatever it is to try to increase that cash flow when you're growing. In the same sense, it's cash management in both directions.
Absolutely. I'm sitting down with your bank and telling them that, look, we're going to be growing at a clip of 25 or 50% per year, and we have the ability to do it. Here's the reasons why. Here's the market. Here's the reasons why we can grow this fast. Here's the type of facility we need to grow. Bankers love to hear this, and they love to see a good, financial projection.
I was going to say, with the financial projections over the next 2 to 3 years of what that business growth is going to be, and they'll look at it. If you've been honest and open, ups and downs over the past few years with them, they're going to believe, and you've been on track in the past, they're going to believe what you're telling them and the structure that, and therefore they are more likely to work with you than panic.
Absolutely. They love nothing more. And then when you hopefully hit your first year target, because you've executed on your plan and you hit that first year target, your credibility is up immensely with the bank, and they're much more comfortable with extending the additional credit that you may need to get to the next 50% growth level, which can happen very quickly. So I can't say enough about being upfront with your bank, and a good bank is a financial partner in this whole business game that we play, and it's critical that you have a good relationship with them. And if you don't have this type of relationship where you can pick up the phone and sit down with your banker, I strongly advise you to look around and find another banker, because that's the only model that I've seen that's ever worked, is that relationship model from the banking side. It reduces the bank's risk, it satisfies the customers, and we help lots of clients find new banks because for whatever reason their banks become complacent and aren't working with them through the ups and downs in business. And good bankers always work with their clients very closely.
I'll end basically where we started this conversation almost an hour ago, and cash is king.
Absolutely.
And if you don't prepare and plan and know what's coming and where it's going to be, you're going to be in a situation of having substantial problems, business problems. You're not going to have the cash to pay your bills. So it's very important that you have staff that you can trust as a business owner to help you manage your cash, plan your cash so that you know where you are going out 3 months, 6 months, a year, so that you can communicate honestly and openly with your financial team. Andy, I want to thank you very much for being here on the show tonight. And how can the listeners reach you if they want to talk to you about their cash and or CFO issues?
Sure. Well, we have a team of talented CFOs that have an average experience of 25 years in all sorts of things such as strategic planning, cash management, growth and turnaround situations. They can reach us at our website at SCFOS.com. That's S as in Sam, CFO, S as in Sam.com, or by phone at area code 443-823-1930. And we definitely would love to help, any companies out there that need help in the cash flow.